U.S. crude oil prices topped $90 per barrel for the first time since 2022. CNBC notes that Saudi Arabia and Russia have extended their oil output cuts to the end of 2023, and the move could result in a substantial market deficit for the rest of 2023. Seeking Alpha article suggests oil demand still strong and continues to rise while U.S. production is declining and OPEC protecting the $90 price. Bloomberg expects oil demand to reach 105 million barrels per day by 2028. In 2018, for comparison, the consumption was at 79 million barrels per day. I used Python to gather the stock price for crude oil per barrel from 1983 to 2021 to analyze its price action on a monthly level. In gray, we see each individual year, while the red line is the average price change in crude oil price. On the x-axis, we see the months of the year, and y-axis is the percent change in price per barrel. We see the average percent change in oil prices are positive for much of quarter 1 to quarter 3. October and November experiences a negative average return of 2.3% for both months. The United States is entering an election year. With Russia and Saudi Arabia working together and continuing oil production cuts, could this have something to do with 2024? If outside forces want to sway public opinion, the way to do this would be increasing prices on inelastic goods like gas. I stripped all non-US election years from the previous dataset and returned the average oil price per barrel in red, while the individual years are in gray. We see increases in crude oil prices in quarter 1 and 2. Quarter 3 seems more unchanged. October still faces the largest decrease in oil prices, while November this time experiences a positive increase in oil prices. However, this is monthly change, meaning the percent change is between end of month November and start of November. Since election is usually at the beginning of the month between November 2nd to November 8th, perhaps this is not an immediate connection. Moreover, swaying public opinion would come in the form of higher gas prices at the pump. There are actually summer gasoline and winter gasoline, where summer gasoline is more expensive because of a higher chance of gas evaporating because of the car's higher temperature. This causes refiners to reduce the chances of evaporation, which results in a higher fuel grade and thus higher costs. The winter gas is cheaper to make and thus cheaper at the pump. Solely being the election month does not directly mean increasing or decreasing gas prices. Since summer versus winter gas is seasonal, this will already be priced in for gas station and gas provider related stock prices. However, the remainder of 2023 and beginning of 2024 may be different as August inflation came in higher than expected and OPEC continues to cut oil production while demand increases. Could we see higher prices at the pump? Only time will tell. The next Fed meeting is September 19th with a potential 0.25% hike. The U.S. has most likely not experienced the full impact of the previous accumulation of hikes. Another 0.25 would most likely bleed into 2024. Ultimately, the government would want to see unemployment increase to curb the inflation. However, how much pain will the economy accept to feel? This pain would be another pressure felt at the pump. Let's check out the average performance of gas station related stocks. Interestingly, the average percent change is positive in October and November, while the average oil percent change is negative during these months. Again, this is only the average, so average doesn't mean correlation, but there is high correlation between Exxon stock to oil, so this is rather interesting. Initially, when I was doing the research, I would have assumed I would have seen a positive average percent change for both the stock and in oil, but it doesn't seem to be the case. But again, average and correlation, not the same thing. The average stock price change in October for Exxon XOM is 1.5%, PSX is 4.6%, Murray USA MUSA is 6.3%, and BP is 1.1%. On average, owning energy stocks seemed to be a good investment in October, showing a strong percent return, though these are only averages and should not be the sole basis of a trade. If you enjoy this average percent change performance by month for stocks, perhaps I can add this feature in the Intrendia's terminal. The link to the Intrendia's free website is available in the description and comments down below. I would enjoy your feedback on the channel and website. What are your thoughts on energy stocks? I would love to read the comments down below. Thank you for watching and using Intrendia's, and I will see you in the next one.